Good day, everyone, and welcome to the March Lean Accounting webinar, Planning a Lean Management Accounting Transformation. This is Nick Katko of BMA, and for the next hour, we will talk about how to get started your transformation and also how to sustain it. First, I have the technical aspects to do, and I need to find out if you can see me, if you can see the screen, and hear me. If you can put that in the question pane, that would be good. All right, thank you very much. All right, now, in terms of the attendees, there are two handouts for this webinar. One is a copy of the presentation. The second handout, which I'll give you a screenshot in a minute, is a copy of the Lean CFO Lean Management Accounting Assessment. If you're watching a recording of this webinar, just send me an email and I'll be glad to send you those attachments. If you are a certified public accountant and would like to earn 1 hour of continuing education, you have to attend the live webinar, answer 3 of the 4 polling questions, then email me and I'll get you a certificate. Excuse me a second. So what are we going to learn today? First is to understand how to use basic lean practices for a successful transformation. Understand the importance of creating standard work during your first pilot. Learn how to integrate lean practices with lean management accounting, and understand that the transformation really never ends. What I'm really going to show you is the standard approach that I have been using for many, many years when a company might call and say, hey, we want some help getting started with lean accounting. What I learned over the years is that the implementation, transformation, whatever you want to call it, of lean management accounting is really no different than the implementation of lean in a company. And so if your company has been on the lean journey for a while, you have a pretty much standard way that you roll it out, whether it's by value stream or by location. And lean management accounting is no different. I think one of the key points is that the lean management accounting transformation never ends. So what we're going to do is start with our first polling question. And these are more than attendance checks. These are just questions related to the presentation. All right, so first question is, what do you think is the main reason lean management accounting transformations don't succeed? You have some choices there. There's no right or wrong answer. This is more opinion. I'll give you about 10 more seconds, then we'll review the results. All right. So here are the results. And actually, each of these 4 reasons are reasons that I have experienced. Company is too busy with other projects. I have actually worked with companies where we're in the process of putting lean accounting in place, and something happens and the company says we're going to pause. People think that it is an accounting project. I've had a few cases where that has been the thought, that this is just accounting. We don't have to be involved in it. Company thinks it has the right information. Yeah, that's happened rarely, but it's almost a sense of certainty, maybe a little bit of arrogance that we have the information. We don't need to do anything else. And I think all of you really hit it, that the company doesn't understand the importance of lean management accounting to the lean strategy. And it's important to understand why things work and why things don't work. So let me hide the results and go back to the presentation. So what we're going to start out with is a general overview of the transformation process. First, and what I consider a very important point, I mentioned using lean practices for a successful transformation. And these are basic lean tools. Some of you may be familiar with them, some of you may use them. But the more that you use these tools and practices, the easier, not the easier, but the more that let me say, you increase the chances of a successful transformation. First, the plan, do, check, adjust, or plan, do, check, act process. Use PDCA to plan and execute each step of the transformation. And you really, I'm going to show you a slide in a couple minutes, you really want to think of the lean management accounting transformation as a series of PDCA steps. Okay, you plan something, you execute, you finish, then you move on. Using the Kaizen approach, rapid implementation. Okay, when I work with a company and we do it live on site, it's a series of, I call them Kaizen events. Maybe they're like 3-day events scheduled about a month apart, where we're putting the first lean accounting pilot in place. You want to do this. The rapid implementation is important because the key to success is using the information, not just creating it. So you don't want to make this a never-ending project. Hold on. Pilot. Okay, in some companies, especially like lean companies like Toyota, they have the concept of the model line. And in other cases of a lean transformation, they say we're going to create a pilot cell or a pilot value stream where we're going to demonstrate how lean works. Well, use the same approach for lean management accounting. Pick a value stream or maybe a couple value streams and put the entire system in place in terms of using it with the box score information so that people can see how it works. The A3 process, which is really just documenting PDCA. Again, document the status of each step, each PDCA cycle. Don't just sort of run it by tribal knowledge. Standard work. As you develop the information and practice using it, create basic standard work for how to gather the information, report the information, and even use it in basic decision making. And coaching. Okay. Use experienced coaches to get you started, someone who has gone through it. And then part of the pilot process is to develop your own coaches. Can you do it on your own? Yeah, but when you don't have this is a learning process. Okay, it's not just doing it. And are you learning? How are you going to evaluate how you're learning? Whether it's by a team or by company, that's where where coaching comes in. It's sort of just like lean. You can say we're going to become a lean company, and you can do it on your own, and nobody has any experience in it, and so you're going to do it the way you think. But there's the tendency that you sort of just put it in place, and you might skip a few steps, and you might not understand, again, where should we be? What are we learning? Another aspect of coaches is you are going to encounter issues, problems, and obstacles. How do you overcome them? And remember this, lean management accounting is a system. Okay, it's not just a bunch of numbers. So you want to have good view of what the system should look like. So the PDCA process, which is the scientific method as applied to business, it is the foundation of continuous improvement. Basic steps, understand the current state, set a future state goal, create some kind of plan to get you to the future state. Conduct the implementation using the Kaizen approach, evaluate the results. Then if the results are good, create the standard work, and then move on to the next plan phase. Now, you're going to see this slide many, many times throughout the presentation. You may get tired of it, but I purposely have used this slide many, many times to reinforce the idea of using PDCA in the transformation process. So here's a long-term view of the transformation process. Start with a level of training and education, common knowledge. Okay, who needs to understand what lean management accounting is and is not? I think there's three main groups that need to understand at the beginning. It's the senior leaders or the owners. It's accounting. It is operations and lean operational people. Okay. They need to understand what it is. Now, is it good to include other functions, sales and marketing, supply chain? Sure. You can include that in the basic training and education. It's about developing common knowledge. What is it? Next step, develop the strategy. What does lean accounting mean to our company? And how is it going to work and integrate with lean over the long run? Because lean never ends. Lean is either your strategy or a large component of your company's strategy. So lean management accounting is the same. Conduct your first pilot. We're going to go into this in a lot of detail in a few minutes. This is about demonstrating how learning how to calculate the numbers and how to use them. Okay. It's really important to get the pilot down well. After you complete the pilot, develop standard work to create box scores and how to deploy and use box scores. You learn a lot from the pilot. Then you create what I would call the longer term deployment plan. How many value streams do you have? You know, how are we going to make this happen? What's a good pace? This really depends on the size of the company. And over the years, I've worked with companies that have, 50 to 100 employees, and then some large international companies. So, there's a scale issue here. Obviously, it's easier in a smaller company. In larger companies like Watlow and Parker Hannifin, what they did is sort of take someone, maybe not a senior leader, but someone, high up in the organization, and sort of put them in charge of the lean accounting transformation. So, you got to structure this. Then you begin deploying in the other value streams based on the standard work. And, the more you do this, the better you get. You have the opportunity to integrate lean management accounting into other functions, for example, administrative box scores. And then, longer term, when it comes to all of your financial planning and budgeting and Hoshin and strategy deployment, integrating it all into that. But that's the basic process. And when you get it, never really ends, because the whole idea of PDCA is that you keep trying to improve based on using it and making the information better. Setting the strategy. I created this Lean CFO assessment for the book. It's available in the handouts. It's also available in the free toolkit. And it helps going through the assessment to understand where you are, where you want to go, and also what's a good starting point. For example, I have some information on value streams. If you don't have your value streams identified and organized, that's probably where you need to start before you can start putting box scores in place. And basically what you get in that assessment is the process I use when I'm going into a company and helping them get started. I basically go through this process using these forms and try to understand where they are and help them give or get to a good starting point. So the basic implementation plan, 4 steps. Start with training and coaching. What's your training plan? What's your coaching plan? You have to identify a core team. Who's sort of going to be the leader of the core team? Who's going to be on the core team? Accounting, operations, lean people from those 3 teams. Sometimes senior leaders are on the team. Depends on the size of the company. What are the practices, the lean practices you're going to look at? You're going to look at how to put lean management accounting into daily lean management, value stream operational review, continuous improvement activities, and basic business decisions. What are the tools? The basic tools is your lean performance measurement system and value stream box scores. So, the tools you build and you put them into practices to use and demonstrate. And remember, it's about learning and practicing. So the more that people use the tools, the better they're going to get at it. I also recommend, single piece flow. Do one value stream at a time. Sometimes companies do a couple value streams at a time just to get more people involved, but you can't really go at it having like 4 or 5 value streams, putting things in place at the same time. So the PDCA cycle to implement in any one value stream is, understand the current state through the assessment, define what by when, okay, building box scores and demonstrate the usage, create the plan, which we're going to go over in detail in a few slides after the next polling question. Execute the plan, execute the pilot using the Kaizen approach, try to get the work, try to build the numbers rapidly, and then you have more time to practice using the numbers. Evaluate the results. There is a level of comfort of people learning how to use the numbers. Then you create the standard work. You got your pilot in place. Then you determine for that value stream, what are the next steps? All right, so let's take a look at polling question number 2. So this is about the current state of your performance measurement system in your company. How would you evaluate your system? Traditional KPIs, top-down financially based metrics, a mixture of lean and traditional measurements, or the lean performance measurements are like totally used in the company. I'm just going to check to see if there's any questions. No questions yet. Give you about 10 more seconds to answer. All right, I'm going to close the poll, share the results. All right, so not overwhelming, the majority said top-down financially based metrics, a mixture of lean and traditional measurements, traditional KPIs, which sort of covers some other things, and then the lean performance measurements came in last. All right, so this leads into the first pilot, okay? So this building your first box score. Again, model line, think about the model line approach. And the reason like manufacturing companies do this, they create a model line, people can see it. You can take other people from other lines, go there and say, here's how things work. Look at how, the material is moving. Look at the people's motions. Look at how they're reporting information on boards. You can see it. Now, you can't necessarily see everything in lean management accounting, but the model line, the analogy is people using the box score numbers and what is the depth and breadth at which they're using box scores in terms of analysis and decision making. So your first pilot, now I put 3 months or less. The reason I put 3 months down there is many times when I'm working with a company, that's the way I try to schedule it. Sometimes it's 4 months depending on other things they have going on. If you're building a box score, and the idea is to build each component of the box score, like one at a time. rather than the whole box score at the same time. Now, again, doesn't mean you can't build an entire box score at the same time. It depends on how big your team is and dividing up responsibilities. But remember, this is a learning exercise, and you're trying to take this core team and really give them a lot of experience so you can turn them into like lean accounting coaches to help the organization in the long run. So again, if you spread out the work too thin, then you don't have that subject matter expertise. So the plan step, which is always the most important in PDCA, is you want to calculate your lean performance measurements. You want to calculate capacity for the value stream. You want to create your first value stream P&L, and then create the deployment plan as to where it's going to be used. The typical deployment is in daily lean management practices, in value stream management, managing the value stream on an operational level, in continuous improvement activities, and also some basic business decisions. You know, the check step, what are we learning? Are the performance measurements we have developed, are they effective? Do we, are the people that are using the box score, do they understand these relationships between the three components of the box score and making decisions? Okay, so we're using the box score to make the decisions we normally make. The outcome may be the same, but it's going through the information that's different, the different information. And then document your standard work, systemize the box score and the lean practices, and then move on. So we're going to look at each of these components of the box score in a bit of detail. So the lean performance measurement system. So what you see here is a picture of a linkage chart from a company that we worked at many, many years ago. This is the output in creating the system. And really what you're doing in this linkage chart process is you're evaluating your current measurements compared to standards of good lean performance measurements. And you're trying to create an integrated system. So what's the linkage chart process? First of all, the plan step, it's a 2-day event, cross-functional team. Your job is to create a linkage chart, calculate the measurements, and create a plan to deploy the measurements into this first value stream. Daily lean management, they have daily measurements. Value streams have weekly measurements. Senior leaders have monthly measurements. The check is, what are we learning? The purpose of lean performance measurements is to identify problems and issues. They need to be simple and easy to use because the various teams own the measure. And you want consistency in the visual display of the measures. I always say the acid test of a good lean performance measure is if it's revealing process problems, it's pretty good. But if you just get the number, if you're getting the measurement, but you're not learning anything from it, then maybe it's time to adjust. Now, as you go through the linkage chart process, you create these measures and then you start using them. You will find some measures are ineffective. So adjust, change them. The measures that are good, document the standard work and end the pilot. I'll show you what the standard work is in a few slides. So there's a lot of information on this slide. What are good measures to use? So we've called this the BMA starter set for many years, and these are proven lean performance measurements that other companies have used successfully. And it's really a good starting point. You know, we're as opposed to trying to come up with your own measures, you can really sort of compare what you use today to what's on this chart. You know, how do we measure? Do we measure on-time delivery? Now, there's a lot of detail behind it, which you can get through other webinars. But if you think about the basic goals of lean, you know, one goal is serve customers better. You want to improve delivery, improve quality, reduce lead times. So how do we measure it? Here's some basic measures. Another basic strategic goal of lean is continuous improvement, improving productivity, improving flow, improving productivity, reducing costs. Then there's the respect for people piece, safety and morale. So again, you can use these measures as your starting point. What do you find? You'll find that you typically have some current measures that can be considered good lean performance measures. You'll find some gaps where you have to develop them, create them, and you'll find some that maybe you have to stop using. Now, this linkage chart process is not about adding more measures to your current system. It's about rationalizing your system down to the lean performance measurements. Okay. So, this is what a linkage chart looks like. And you go through the process. I recommend you use Post-it notes. Okay. How do you work? You work from left to right by column. So what are your basic lean strategic goals? Now, you can use, if you have specific goals, you can do that. Use those. If you don't have specific goals, you can basically use these 8 goals. How are we going to measure the second column from the left? How are we going to measure this at the company level on a monthly basis? And then you link the measurements back to the strategies. And you can see that, some strategic goal links to more than one measure. Then you go to the value stream level. What are the value stream goals that we need to have in order to support the movement in the right direction of the strategic measures? And link them up. How are we going to measure in the value stream how we are progressing towards achieving the goal? And that's one thing that when I'm working with companies, I like to say is that you have a goal, and a lean performance measure is just measuring your distance from the goal, whether it's at the company level, the value stream level, or the cell level. So, quality, we want perfect quality. That's the goal. So we measure a defect rate. If our defect rate is 30%, we want to try to get that down to 25, then 20. We want to try to get that down to 0%. That's the distance from the goal. Then after you have the value stream measures and you've linked them, you can identify critical success factors at the cell level, which is what does a cell have to do well every single day. Set goals, set the measures. So what you're doing is you're linking goals to measures, okay? And you're also creating measures that are relevant to the specific part of the value stream that are being measured. It really is if you get a good team together, it is a fun, interesting exercise, and I recommend you take maybe 2 or 3 days depending on, but get the right people together and you'll learn a whole lot. I mentioned standard work. after you've put the measures through the pilot process? What is the equation? How do you calculate the measure? Is it easy to understand? What's the source of the data? Is it easily obtained? Who is responsible for collecting the data? And how is the measurement presented? Is it just a number? Is it a trend over time? Is it in graph form? And, and on what board is it? So that covers the linkage chart process and creating the performance measurement system. And once you do it for your first value stream, when you get to your next value stream, you have the strategic measures in place. You just start at the value stream level and go down to the cell. And you may not necessarily create totally new measures in every value stream. It really depends on the products or services of the value stream and how it operates. But there's a lot of work that's done in the first pilot that sometimes can be replicated in the second pilot. In fact, you can take the value stream measures from the first pilot and say, can we apply these and use these in this value stream? So it goes a lot faster. So let's move on to the value stream income statement. All right, so again, this is another event, another cross-functional team. And even though, people may wonder, why do we have to have a cross-functional team? It's important to understand that the value stream income statement will be created in accounting and finance, but it's going to be used in operations in addition to being used in finance. So you want to bring these people in, the value stream people in. This again is a very interesting exercise in terms of learning. So what do? Here's a good way to get started. Get your general ledger into Excel. Okay, and you can see basically the account number, maybe the description and the amount, and list them in rows. Then you have your value stream expense line items. Okay, so here's just some basic line items. And what you do is you look at each row, each expense in the general ledger, say, where does it go on the value stream income statement? Now, this is a mapping exercise, okay? And it's a learning event. The reason I call it a learning event is because, this happens every time I've done this, people sometimes don't know what's in the accounts. And it's very interesting to see how people react. I didn't know that was in this account. Oh, okay. So you're learning what drives the creation of the expense. What you learn is that typically some expense accounts go to one line item on the value stream P&L. Sometimes they don't. Sometimes they have to be split up a little bit. The standard for a value stream P&L is actual costs. Okay, this is very similar to the starter set. You want to look at direct costs and split them between fixed and variable. What are your variable costs? Well, typically it's materials. You might have some others. Your fixed costs, labor and machines. That covers typically 80 or 90% of the expenses in any operational value stream. Then you have shared costs. So you use accrual accounting, okay, but you're looking for the actual cost. You're looking for what's the source of how are we going to find the cost in the general ledger to apply it to a value stream income statement. For the shared costs, how are we going to assign them? You know, facility costs, we're going to do it on space. You know, operational support, maybe it's the full-time equivalent employees in the quality department that work in each value stream, something like that, something simple. You also have to design the value stream income statement, okay? You know, what's the revenue? What are the direct variable costs? In this example, the company uses raw materials, supplies, outside processing, and sales commissions. What are the direct fixed costs? Labor, machines, equipment. Then there's other. And then what are the shared costs and how are we going to assign them to this first value stream? Now, remember, you're not necessarily creating the company-wide value stream income statement here. You're just doing it for one value stream. Once you do it for one value stream, depending on the size of your company, it might be easier than, it's a whole lot easier than to do it for the whole company. So if you think about performance measurements, you know, sales in terms of serving customers better, your variable costs are going to, you know, if sales go up, your variable costs go up. Your fixed costs are related more to productivity, and you're trying to, you want the increase in fixed costs to be less than the growth rate of sales. So let's do polling question number 3 before we move on. So how does your company measure capacity? Alrighty, I'll close the poll, share the results. All right, what I expected to see basically, you know, a lot of companies use MRP. Sometimes it's just total available hours. Other companies really don't have a, you know, a method. Okay, good. So we're going to talk for a few minutes about the capacity event in your first pilot. Now, SMEs, subject matter experts. These are the steps to calculate capacity. I would say the majority of the time, this takes the longest in the pilot. If you have a value stream map, it's easier. This is new information, the way that capacity is calculated. Okay, it's not by MRP. It's based on value-added activities and non-value-added activities. I'm going to give you a link to a webinar I did a couple months ago on how to calculate capacity. We don't have time to actually show the calculations here. I just wanted to review the steps, and this is really, really important. So you have to first determine the source of the data. Are we going to use the process steps and look at the process steps? Or are we going to look at the activities of an employee in a particular position? Now, how do you decide? Well, if the value-added activities in a value stream have to be performed in a specific sequence, like in manufacturing, you use the process steps. Now you can get the information from value stream maps or direct observations. Typically, process steps, something tangible is produced, like a product or something. Could be some services if the sequence has to be the same every time. When it comes to looking at a position or employees, there's a sequence of activities, but they don't have to be done at the same time. Okay, so a lot of administrative process, and there's a typo there, producer information. It said intangible, intangible product. Sorry, not intangible producer. So, healthcare is another example. So think about which method you have to use. I'm going to give you, there's a link to the Lean Accounting Toolkit to that where you can get the capacity templates. Then you decide where you're going to measure. You're going to do all the process steps or just the bottleneck. Okay. The simpler the value stream is, the more that you can do all process steps, the more complex the value stream. Just do the bottleneck because that controls the rate of flow. You collect the data. You want to understand, what's the total capacity over the course of a month? What's the average time to complete the value added, to complete every activity, whether it's value added or non-value added? How many times does the activity occur during a month? You can get the information from value stream or process maps, or you can do a direct observation. I put there sample size 30, okay? The idea is to get an average month, okay, not the extremes. After you've calculated your current state capacity, you've built your first box score. Now you can go into demonstrating. So this is analysis and decision making. Where do you want to use it? Daily lean management. We want to put our huddles, our daily lean measures in the cells. Measuring continuous improvement through the box score. Understanding capacity. When do we have to get more capacity if demand is going up? Your value stream operational review. How's the value stream doing over time against some targets? The profitability of sales opportunities. This is always a good one because it really relates to how the box score works. And then you can do other decisions such as make buy. Okay, just try to get a good variety of decisions to demonstrate. Now, you can take a decision that you've made in the recent past and redo it using the box score, or you can look at an upcoming decision. The real point here is that you want to show how to use the new information. Now, you may arrive at the same conclusion, but you're using different information. And really, these are the 6 questions that get answered if you look through the box score. What's the operational performance impact? What's the capacity impact? And when you understand that, then you can look at the different components of the value stream P&L. What you want people to learn is these relationships between operating performance, financial performance, and capacity. How do they work? I always say that these relationships are very, very dynamic. They're not static. Okay. So how do you sort of judge how well this is going? Are we making the decisions differently, even if the outcome of the decisions are the same? Are we asking the different questions by looking at the information in different ways? And that really gets to the 6 questions here. Now, some people pick up on this really, really fast. Some people take a little more time. The one point I want to make is it's people may run things in parallel. We're going to use the box score, but we're going to do the old decision. We're going to look at it the old way too. I don't really encourage that, only because it's sort of like, what happens if you get a different outcome? Okay. But just be careful with the running things in parallel. Lean decision making is about driving thinking, okay, of the people doing the analysis and decisions. The box score drives the thinking habits, understanding lean relationships. Every analysis is really a problem to be solved, or it's an opportunity. The decisions, what's good? Does it improve the box score in some way? Something that increases capacity, but may not have a continuous improvement event that increases capacity today, but may not have a financial impact, is still a good improvement event, for example. So when you get through all that, your pilot's done, okay? What does good look like in terms of a pilot? What have we learned? Do we have standard work built that can be applied for subsequent box score deployments? Are the cell measures in the pilot integrated into daily lean management? Is the box score integrated into operational review and continuous improvement? And are we using, is using the box score for basic business decision standard work? Now, you don't have to do every single decision, but some basic decisions. All right, so let's do the final polling question. So what do you think should be your next step to implement lean management accounting? And by the way, if you're if you're not working in a company right now, maybe you're a consultant or something, nothing is the proper answer. All right, I'm going to close the poll, share the results. All right, looks pretty good. I'm going to hide the results and move on. All right, so after you get done with your first pilot, you can start working on a longer term transformation. So here's basically some tips. A lot of this there's some repeat. Again, every deployment of subsequent box scores, think of it as the pilot, probably can go a little bit faster than the original pilot. Understand the value stream deployment sequence. Follow the standard work, and basically after every value stream is implemented, you can update that standard work, create a good deployment usage plan. Again, the basic usage is the same. I've repeated this many times on purpose. And the check and adjust is the same. Okay, so you follow the same process. Don't skip steps. Okay, and one of the things I don't have it written down on any slide is that core team that did the first pilot, they can help subsequent value streams. And, sort of long term, think of lean management accounting as really an integral part of your lean system. All right, daily lean management, which is about stability and control. Do we have effective performance measurements in place? The whole continuous improvement system, and understanding value streams and flow. Okay, do the box scores reflect all of the lean practices put in place, to create flow? Are box scores being used for sometimes identifying Kaizen events and evaluating the overall impact of Kaizen events? In terms of analysis and decision making, okay, box scores throughout the company. And that includes eventually teaching sales how to use box scores, or bringing sales in to a cross-functional analytical event. Strategy deployment, or Hoshin, using your lean performance measurements if you use X matrices, your lean performance measurements should be on your X matrix. And monthly box scores when you get down into the value stream planning. The lean management accounting system really connects the company, okay? The box scores have proven to work over the years in terms of just about any business decision that impacts the value stream. The reason I say it connects the company is that these functions are looking at the same information, so it drives better thinking habits, okay? All right, just to wrap up, okay? If, a lot of people said you want training and development, training and strategy. Okay, here's some options. I have the lean accounting certification courses. That's the link. Some of you may have already taken it. Thank you. There's special pricing still available till the end of the month. Or you don't have to complete it before the end of the month. You just have to register. If you're interested, send me an email, can get you set up. It's basically $100 off the $400 price. I also do my standard 3-day lean accounting training, assessment, and planning workshop for a company where I come in, have a core team, we do some training, we take plant tour, and basically go through that assessment process. And at the end of the 3 days, the idea is, here's your plan to implement lean accounting. If you'd like to learn more about any of these specific topics we talked about today, there's the link to the recorded webinars. And those are the 4 webinars that are all fairly recent that go into detail, a lot more detail than this webinar. And the free lean management accounting toolkit, that's the link there. There's video, there's frequently asked questions, and there's the capacity calculations. And finally, upcoming webinars, the value stream management series, which is April, May, and June. I do recommend you take all 3 of them because they're all connected. And this really talks in more detail about the integration of lean practices with the lean management accounting. Okay, we don't really talk about developing the numbers. It's more about using the numbers. So those are just some learning opportunities. If you have any, I'm going to see if you have any questions. Nobody had any questions. If you have any questions after the webinar, please feel free to contact me. Remember, if you want continuing education, let me know. I'll get you a certificate. If you're watching a recording of the webinar, you need any of the materials, send me an email. I'll be glad to get them to you. So hopefully I'll see all of you on April 9th. I've had to change, this comes up in a couple weeks. Usually I try to space the webinars a month out, but due to work obligations, I have to do it on April 9th. So I hope all of you have a good day. Hope you learned a little bit, and hopefully see you next month. Have a good day. Bye-bye.